1971, a quiet Sunday night in the United States. President Richard Nixon walks onto television and announces something that should have shattered the global economy. The US dollar will no longer be backed by gold. For almost 30 years, countries could trade dollars for real gold held in American vaults. Suddenly, that promise was gone. No gold, just paper. And yet, something strange happened. Instead of abandoning the dollar, the world doubled down on it. Today, more than 50 years later, the US dollar still runs the global financial system. Not the euro, not China's yuan, not even gold. The dollar. It prices oil. It settles international trade. It sits in central bank vaults from Brazil to Japan. About 60% of the world's foreign currency reserves are still held in dollars. Which raises a strange question. Why does the entire world trust a currency that hasn't been backed by anything for half a century? And even more uncomfortable, what exactly could break that trust? Because the truth is, the dollar doesn't dominate the world because America says so. It dominates because of a system that quietly locked the entire global economy into it. A system built on debt, oil, and a massive financial machine most people never see. Let's start with the simple version. Imagine the global economy as one giant marketplace. Countries are constantly buying and selling things from each other. Cars from Germany, electronics from South Korea, oil from Saudi Arabia. But when two countries trade, they need a currency both sides trust. Something stable, liquid, easy to move. And after World War II, only one country had the financial power to provide that: the United States. In 1944, leaders from 44 countries met in a quiet town in New Hampshire called Bretton Woods. The goal was simple: build a stable global money system after the chaos of the Great Depression and the war. The solution? Every major currency would be tied to the US dollar, and the dollar would be tied to gold. $35 for 1 ounce. This effectively made the dollar the center of the global economy. If Germany wanted stability, it held dollars. If Japan wanted stability, it held dollars. The dollar became the world's financial anchor. But remember what happened in 1971. The gold link was cut. In theory, that should have destroyed the system. Instead, the dollar became even stronger. Why? Because by that point, the world had already built its entire financial plumbing around it. And once a system reaches that size, it becomes incredibly hard to replace. Take oil. Oil is the most important commodity on Earth. Every country needs it. Planes, ships, factories, trucks. Modern civilization runs on it. And almost all global oil is priced in dollars. If India wants oil from Saudi Arabia, it pays in dollars. If Japan buys oil from the UAE, it pays in dollars. Which means countries need dollars even if they don't trade directly with the United States. To get those dollars, they export goods, or borrow them, or hold them as reserves. And that's where things get even more interesting, because the dollar isn't just used for trade, it's used for global debt. Governments borrow in dollars. Companies borrow in dollars. Banks borrow in dollars. In fact, trillions of dollars in loans outside the United States are denominated in dollars. Which means if the dollar moves, the entire world feels it. If the Federal Reserve raises interest rates in Washington, mortgage payments in Brazil change. Corporate debt in Turkey becomes harder to pay. Entire economies feel the pressure. It's a strange kind of power. The US controls its own monetary policy, but the ripple effects hit the entire planet. And yet the real reason the dollar dominates isn't oil. It isn't the military. It isn't even history. It's something much less dramatic. The bond market. Specifically, US Treasury bonds. When countries accumulate dollars through trade, they need somewhere safe to store them. Not under a mattress, not in a regular bank. They need a massive, liquid, trusted market. And the United States provides the largest one on Earth. The U.S. Treasury market is worth more than $25 trillion. It's deep, it's stable, and you can move billions through it without breaking the system. No other country has a financial market that large and trusted. Not Europe, not China, not even gold. So central banks around the world keep buying U.S. government debt, which ironically helps the U.S. government borrow more money. This creates a strange financial loop. The world needs dollars. To store those dollars, it buys U.S. debt. Buying that debt helps fund the U.S. government, which keeps the system running. It's a global financial flywheel. And for decades, it has worked surprisingly well. But every system has pressure points. And in recent years, people have started asking uncomfortable questions. What if the world stops trusting U.S. debt? What if countries start trading oil in other currencies? What if digital payment systems bypass the dollar entirely? You're already seeing small cracks. China and Russia are experimenting in trade in their own currencies. Some oil deals are being settled outside the dollar. And central banks are quietly buying gold again. Not abandoning the dollar, but hedging against it. Because the biggest threat to the dollar isn't another currency. It's confidence. Global reserve currencies don't collapse overnight. They fade when the world slowly decides it has other options. That's what happened to the British pound in the early 20th century. For 100 years, the pound ran the global economy. Then slowly, quietly, the system shifted. Trade patterns changed. Financial markets moved. And eventually, the dollar took its place. Which raises an uncomfortable possibility. The dollar's greatest strength is that everyone uses it. But that also means if enough countries decide to use something else, the entire system could change faster than anyone expects. Not tomorrow, not next year, but the moment global trust starts moving somewhere else, the entire financial map of the world could shift. And if that happens, the real question won't be whether the dollar falls. The real question will be what replaces it.